So much for being part of the bulletin. I am Pius Kojo Baka. I look now at our stories. The Bank of Ghana is projecting a further reduction in inflation in the coming months. This is based on the central bank's internal forecasting model on inflation. George Biafe tells us more.
Inflation rate for the month of April slowed to 25% from the previous figure of 25.8% in March. But based on this modeling coming from the Bank of Ghana, which it has been using and serve as a major guide for its policy rate decisions, the central bank believes that inflation rate will continue dropping going forward. Providence Miracle, the chief economist with the Bank of Ghana, and has been given more details on this inflation modeling.
The Bank of Ghana relies on a suite of near-term forecasting models to forecast inflation. Now, on the chart here is a cocktail of these forecasting models. So these forecasting models are projecting inflation 3 months ahead, a near-term forecast of inflation. And as we look at the chart here, we can see for the month of May, 1 month ahead inflation forecast. All these suite of forecasting models seem to be suggesting a certain inflation number for the month of May. Now, let's take, for instance, the seasonal auto-regressive integrated moving average model, the SARIMA. Now, the SARIMA is suggesting that inflation for May will be around 26.8%. Now, the median forecast model is suggesting an inflation of 24.1%. If we come to the simple average forecast model, it is also projecting an inflation of 23.8%. The event steady model without judgment is suggesting an inflation of 23.3%. Now, the weighted average forecast model is also suggesting an inflation of 22.7%. Now, the mean square prediction error model, which happens to be the bank's best model, is projecting an inflation of 22.2%. And so is the e-inflation forecasting model, same 22.2%. Now, the event steady forecasting model without judgment is suggesting inflation in May will be around 21.8%. And the inflation profile for the previous time round, neutral, is also suggesting an inflation of 21.3%. And the previous inflation profile, non-neutral, is suggesting an inflation of 21.3%. Now, if you look at all the predictions from the various forecasting models, you will see a high of 26.8%, and a low of 21.3%.
Now, there are fears that looking at the current challenges facing the economy, including the city's depreciation and rising prices of petroleum products on the market, the end-of-year target of a lower band of 13% and higher band of 17% will not be met. But the bank
I want to stay a while longer at the central bank because they are projecting improved lending to more small businesses and retail clients. Well, this is based on the workings of a new credit reference bureau by My Credit Score that will help improve lending to this category of borrowers in the country. Dr. Maxwell Opokwafari is the first deputy governor of the Bank of Ghana.
They are coming to work together in terms of, the standard rating agencies we have using information or working in the banking sector. This is bringing in digital information also as part of assessing your credit. So your digital footprints, your digital transactions and compliance and trusted credentials will all come into the footprint of assessing and estimating your credit history and go beyond just printing your credit history for the banks, but actually scoring individual credits.
So would it be more of like the retail end of, and that would, what for you do you think would be the broader impact on the entire financial inclusion system?
You to assess risk and price risk. so that George's risk will be assessed different from Maxwell's risk. And so when you want to assess credit, your risk will be priced differently from my risk based on our transaction history and our rating scores.
Doc, finally, your final thought for the business community, your final thought for the players in the financial sector, and the zeal and the commitment by the Bank of Ghana when it comes to improving fintech and innovation, because some are saying that that is the next phase of central banking regulations and expansion and development.
I mean, clearly this summit shows that Ghana is at the forefront when it comes to the continent in terms of creating the digital payment infrastructure that has enabled us to be able to move ahead of our peers. But we are not ending there. We are determined to improve on our digital payment infrastructure to actually open up and deliver financial services more efficiently and at a lower cost to close the digital gap. There is clearly a digital gap on the gender side, on the young children side, and other side. We need to close that digital gap, and we are determined to do that on the financial sector side. On the health side, I think we can always collaborate. We are creating the environment, creating the structures, creating the infrastructure that will help us to be able to deliver that. And the testament from this summit tells you that Ghana is really on a path to close that gap and also to lead the way in Africa.
Dr. Maxwell Opoku-Afare in that interaction with my colleague George Yafe, and we've got to be heavy within the banking space because the Bank of Ghana has raised some serious concerns about how Societe Generale is going about its planned review of operations. The parent bank earlier this month announced that it will soon embark on a strategic review of its business in Ghana. However, it was silent on the structure of this review. Governor of the Bank of Ghana, Dr. Ernest Addison, says even though they, as the regulator, have basically been left in the dark.
Change resources associated with remittances are placed in the nostril balances of our commercial banks, and the banks have access to those resources to finance imports. So it comes to the broader Ghanaian banking system. I'm not sure if the central bank wants to go and chase those resources also to build reserves. At the moment, we don't intend taking those resources from the commercial banks. I think that the commercial banks should have access to the remittance flows to finance economic activity.
All right, so let's analyze these assertions by the governor further. Joining us via Zoom to do that is Professor Lord Mensah, an economist. He joins me live on the Zoom to have us interrogate these issues. Thanks so much, Professor Mensah. And I want to know, what do you make of this the view of the Bank of Ghana? Really, should they be tougher on SG Ghana for not volunteering information? And of course, that the governor shouldn't have asked the subsidiary in Ivory Coast, do you think?
Well, there's no, legal requirement for a multinational to inform, Bank of Ghana. I'm talking about multinational bank to inform Bank of Ghana of their exit. However, they may have to follow, the usual business ethics by informing their stakeholders, customers, and other, people who matter in the banking space. As far as their relationship with Bank of Ghana is concerned, they don't have any, law that requires them to inform Bank of Ghana of their exit. And it's not in Ghana alone that they are exiting, all the other countries that they are exiting.
Then I guess there's no need for the Bank of Ghana to give timelines to SG to furnish them with their planned future plans, basically.
Well, for, the image of SG, it's a reputable, bank. And therefore, they may not want to solve the relationship they have, anywhere they go. And it's not in Ghana alone that they are operating. Once they're exiting here, there are other places that they have an establishment. So once Bank of Ghana has shown interest and wants to know, why their exit as a regulator, it's a good thing. You may want to know the reason for exiting. Is it the economic situation, or, there are other things that is triggering, your exit. So it's a good thing for Bank of Ghana to know.
Before this news broke, or prior to that, there were concerns that, well, the Bank of Ghana should have come out earlier during the time where the news was making rounds. So basically, address some of these issues to kind of stabilize the banking sector?
Yeah, of course, as a bank, your research unit should know. I mean, every now and then, what are the possibilities? The multinationals especially, and especially when your economy is not doing well, which are the ones that are likely to exit? I mean, these are the things you may have to get beforehand and, arm yourself in terms of, the impact of their exit on the economy. And so you can advise on that. But the Bank of Ghana also serves as a technical eye to the government. So effectively, they should have, preempted it through their research.
Let's shift away from this subject to one other developing story we are learning, which has to do with, Ghana making efforts to have its bilateral creditors, sign an MOU with them. As we speak, the Minister of Finances in Kenya, and of course, working on that for us. But do you foresee anything positive coming out of that?
Yeah, it's been long overdue, and this has been keeping the economy in the space of uncertainty for some time now. So, we're hoping that something good will come out of it so that we'll be certain as how much Ghana is going to pay at the end of, the day when it comes to its debt. But as we speak now, the way things are going, well, of course, I gave the red flag that external creditors, looking at, how diverse they are, it will take some time. And so we all pray that they come out, with something good for us.
And again, I want to take you back to this Bank of Ghana, where they are projecting a further reduction in inflation in the coming months. It was our first story. I want to know your thoughts on that quickly.
Yes, I was watching the projections and then the models that, were used. Clearly, these are in-series models. And when I say in-series models, we are talking about looking at past inflation and how they feed into, the future inflation. But I can tell you that inflation projection goes beyond that. There are external factors that you may have to look at. Something like the exchange rate, how it fits into, what do we call it? Inflation. Very, very important. I think their model did not consider that. But in any case, they are on the field. Let's see how things play, if it will fall through. But I'm afraid to tell you that inflation is not likely to come down as expected.
I see. Thanks so much, Professor Lord Mensah, for agreeing to speak to us on Business Live. We are indeed grateful for speaking to us here on Business Live. You're still watching Business Live. We are back with more. Please stay. On by was the Joy Business Van. To some other stories, Social Security and National Insurance Trust NATE's contribution from private businesses have hit a record high in March this year. Now, the Bank of Ghana data puts it at almost 400 million cedis. Here's more from George Yafe.
Contributions from private sector over the last 3 years and even before COVID-19 has not been doing that well. However, fresh data from the Bank of Ghana show that the situation has improved significantly. Some are linking it to the business situation of these enterprises in the country picking up strongly. Others are also of the view that the data can be used to carry out some assessment of how businesses are currently performing in this economy. The development may go a long way to improve contributions and put the State Pension Trust in a strong position to meet its obligations in the coming months.
Thanks so much for watching Business Life with me, Pius Kojo Baka. For more stories, do log on to myjoyonline.com/business. See you same time tomorrow. Bye-bye.